Sandra is a 41-year-old dental hygienist in Hamilton. She took a second job at a walk-in clinic last September, 3 evenings a week, $22,000 a year. Tax was coming off every paycheck at both jobs. She thought she was covered. Her accountant called in March. Sandra owed the Canada Revenue Agency just over $4,000, on top of everything already withheld. Nobody had told her about a one-page form, one checkbox. The whole bill was preventable. Here is the problem most Canadians with 2 jobs never learn. Canada's income tax system is progressive. Your income is taxed in layers. The first $55,867 you earn in 2024 is taxed federally at 15%. Every dollar above that moves into the next bracket at 20.5%. Here is the catch. Each employer calculates your withholding in isolation, as though the other job does not exist. Employer 1 looks at Sandra's $58,000 salary and withholds as if that is her full income. Employer 2 looks at her $22,000 and starts the calculation from zero. Neither employer made a mistake on their own. Together, they got it completely wrong. Sandra's real taxable income was $80,000. A large portion of her second job fell into the higher bracket and was withheld at the wrong rate all year. There is a second problem hidden inside the same form. The TD1, the Federal Personal Tax Credits Return, is what you fill out at every new job. It tells your employer which tax credits to apply when calculating withholding. The most important credit is the basic personal amount, $15,705 federally in 2024. Every Canadian earns this slice of income tax-free. When Sandra started her evening job, she claimed that amount again on a fresh TD1. Her second employer applied it, treating another $15,705 as untaxed, but that room was already used at her day job. That double claim alone created a federal withholding shortfall of $2,355. When Sandra filed, her 2 T4 slips showed combined federal withholding of about $7,850. Her actual federal tax on $80,000 came to $10,971. Federal gap, $3,121. Ontario provincial added roughly $900. Total balance owing $4,000. Due April 30. And here is the trap that follows. If your balance owing exceeds $3,000 in 2 consecutive years, the CRA requires quarterly installment payments the following year: March, June, September, December. What started as a withholding gap becomes a quarterly obligation that stays with you. The fix takes 5 minutes. Download a new TD1 from the CRA website. Bring it to your second employer's payroll department. There is a checkbox for employers with more than one employer. Check it. Enter 0 on the basic personal amount line. That alone fixes most of the problem. For tighter control, the TD1 has a line for additional tax to be deducted. Sandra's $3,121 federal shortfall spread over 34 remaining biweekly pay periods works out to $92 per paycheck. She writes that number on the line, her take-home drops slightly, and she owes nothing in April. If you have already filed and have a balance owing, pay something now. Even $500 sent through your bank bill payment stops interest from accumulating on that portion. The CRA's prescribed interest rate is 10% annually. On a $4,000 balance, 6 months of doing nothing costs $200. The full breakdown, including the Quebec TP 1015.3V wrinkle and how the installment threshold works, is in the comments.